Een hele goede middag allemaal op 7 maart. Welkom bij een gesprek van de Commissie Financiën met professor Gabriel Zucman. Ik ga overschakelen in het Engels, omdat onze gast geen Nederlands spreekt. Maar dan weet u ook waarom. That was me in Dutch saying that we're here in a conversation with you, Professor Zucman, and want to welcome you as the Permanent Committee of Finance. We're very happy that you're here on a very short national tour. And very happy that you were willing to come to Parliament and talk to us about your research. We were so willing to do it that we planned it during the vote. So some of our colleagues will come in and out. But we're very happy that you're here. And we also know that some staff members are looking and listening to this conversation. So excuse us for that part, but we were so much willing to talk to you that we organized it on this particular time. So thanks again on behalf of the committee. So we're here today with member Romke de Jong of D66 and Henk Nijboer from the PvdA, the Labour Party. And what we're going to do is I'm going to give you the floor so you can give an introduction, and then we'll have a couple of questions and we'll fill the time informatively. So the floor is yours.
Thank you. Thank you so much for having me. It's such a pleasure and such an honor to be here today. And I very much look forward to your questions and to the discussion. So the starting point of my remark is that we live here in the Netherlands, in EU countries, in high-income countries in general, with tax systems that are largely inherited from the 1950s, 1960s. Because the two main pillars of our tax systems today in terms of tax revenue sources are the value-added tax, the VAT, and payroll taxes. The VAT is first was experimented and invented in France in the 1950s, and it's one of these great French exports, like wine and cheese. It caught fire, and then essentially almost all the world's countries adopted it. And payroll taxes, were invented before, but they only became big after World War II to fund the social state, retirement, healthcare, and so on. And the characteristics of these two taxes is that they are flat taxes, not progressive, and they are taxes either on consumption, like the VAT, or labor income, payroll taxes. So they exempt saving, they exempt wealth, they exempt capital income. And all of that made a lot of sense at the time in the European context of the post-World War II decades, when inequality was at a historically low level, and also the capital stock was at a low level, after the destructions from the world wars, after the Great Depression. So it made sense to say, okay, we're going to tax labor, we're going to exempt capital, we're going to have flat tax rates, we don't care too much about progressivity, about inequality. But today's situation is really the opposite of the situation back then. Income and wealth inequality has been on the rise. It's not rising everywhere at the same speed. It's been increasing more in the US, in China, in India than in the Netherlands. But nonetheless, there is this global trend. Capital is making a comeback. There's a much bigger capital stock today relative to income, relative to output than 60 years ago. The capital share of income is also growing. And so we need to invent tax systems that are going to be adapted to the challenges of the 21st century, the inequality challenges of our time. And so when you say that, the problem is that many people are genuinely convinced that in a globalized world, you cannot tax capital. You cannot tax high-income individuals or wealthy individuals because they will move to low-tax countries, or they will hide assets, or profits will move to tax havens. And these beliefs are genuinely held by a lot of people, but they're also, incorrect, because tax competition, tax avoidance, tax evasion, they are not laws of nature. They are policy choices. We've chosen tax competition since the 1980s, but we could make other choices. And we see it, for instance, very concretely with the fact that starting in next year, there's going to be a global minimum tax of 15%, implemented starting next year within the European Union, something that was deemed utopian, 10 years or 5 years ago. So coordination is a choice that we can make. And what I want to say today is just basically a couple of things. I want to say that despite the efforts that have been made over the last decades, which are real and significant, much more needs to be done. And I want to explain exactly what, in my view, should be the goal to reform our tax systems in the coming decade. So why do we need to do more? The global minimum tax of 15% is a major achievement, but it's also really insufficient for two reasons. One is that the rate 15% is really too low. When you look at the taxes that working class people, middle class people pay in a country like the Netherlands, when you include the VAT, payroll taxes, income taxes, it's typically around 30%, 40%. And so it's very hard to understand and to accept the notion that the most powerful economic actors, multinational companies, should be legally allowed to pay only 15%. It's very hard to understand. Second, in practice, the minimum tax rate is going to be even less than 15%, because in the agreement that was reached, there is a big exemption, there is a big loophole for substance, meaning if a company has enough real activity in a low-tax country, it will be able to exclude its profits from the base of the minimum tax and pay still less than 15%, potentially as little as 5%, or there's no floor as long as you have sufficient activity in a country. And so that's really the reason why we need to do more. The good news is that because there is this agreement there is a base on which we can build. And I think the objectives concretely for the future should be quickly to move to a higher minimum tax rate, could be 20%, could be 25%, and to get rid of the exemptions, the carve-outs that were introduced relatively late in the negotiations. And the way to do that is, what I want to emphasize is that any country can do it on its own. I'm all in favor of the broadest possible international agreements, but if you insist on starting with unanimity or consensus, it's almost impossible to arrive at any substantial, ambitious agreement, because a number of countries and territories have interest in preserving the status quo. And so, in practice, the way to arrive at ambitious agreements is when one country or a group of countries kind of unilaterally lead by example and say, well, for us, there is this floor of 15%, but we are going to be more ambitious, and for us it's going to be 25%, for instance. And this country could very much be the Netherlands. It could be the Netherlands with Germany, with France, with Spain. You don't need unanimity within the EU to be more ambitious than 15%. You don't need consensus. So that's, in my view, kind of a very important objective. The second objective for the coming years should be to apply the logic of this global minimum tax to wealthy individuals. So just like we've been able to create a global minimum tax on corporations, I think the next step is to have a global minimum tax on very rich individuals, billionaires or centimillionaires, very wealthy people. Why? Because a key problem in our tax systems today is that we do a very, very poor job at taxing very wealthy individuals. So in the Netherlands, there's been an excellent study that was conducted by Wouter Lenders, one of my students at Berkeley and co-authors, where they show that the progressivity of the tax system, when you take into account all taxes, kind of collapses at the very top of the income distribution, that the very rich have low effective tax rates, but because they can avoid the income tax. With the income tax does a poor job at taxing the truly wealthy, because when you're very rich, it's relatively easy to structure your wealth in such a way as it generates little taxable income. So for instance, you instruct your companies not to distribute dividends. And what I want to say is that it's not a specificity of the Netherlands. You have the same problem in the United States. We showed that with my colleague Emmanuel Saez. There's the same problem, even more extreme, in France, where there's a recent study similar to the study that was conducted in the Netherlands, really high quality, where the French team of researchers finds that the French billionaires essentially pay almost no income tax whatsoever, almost no income tax. And so the obvious solution to that problem is to say, well, the proper way to tax billionaires is to tax wealth itself, the stock of wealth, to have a progressive wealth tax. And this idea, of course, there's a long experience with wealth taxation in many countries, but what I want to emphasize is that we need to recreate wealth taxation so that it targets the super wealthy. It's much more comprehensive than what has been done in the past in many countries. And ideally, it's coordinated across several countries. So I think it should really be the objective for the coming years. Thank you very much, and I look forward to your questions.
Thanks a lot, Professor Zucman. Voor de mensen die wat later zijn ingeschakeld, welkom bij de vaste commissie Financiën, die professor Zucman van de Berkeley Universiteit te gast heeft. Er is ook een collega aangeschoven, collega Dassen van Volt. En ik stel voor dat we 1 voor 1 vragen doen. En dan begin ik bij collega De Jong van D66.
Well, thanks for this start. You're a proponent of it, taxing the winners of globalization, but this group is very mobile. You already said it. How do you think we can solve that, to see the group which is so mobile, hopping from country to country, where the real perspective is?
Yes, that's a very important question. So I think, it's largely a policy choice, to let companies move profits or move activity or move headquarters to relatively low tax countries. It's something that can be regulated by policymakers. Let me give a couple of illustrations. One is about headquarters. So in the European Union, it's very easy for firms to move headquarters, in and out of the Netherlands, for instance. In the US, it's the polar opposite. If you are founded as a US company, you cannot move outside of the US. You are treated forever as a US corporation, unless you merge with a foreign firm, and in the process of that merger, you acquire the nationality of the foreign company. In the US context, this is known as a tax inversion. Now, in 2016, the Obama administration strengthened the rules around tax inversions to make them much harder to achieve by companies. And the result of that is that since 2016, there's been zero tax inversion. And I want to make sure that everyone understands that what this means is that since 2016, no US company has been able to move out of the US. Okay, so it shows that it's a choice that policymakers do. We can let companies move headquarters, or we can try to regulate it to say, well, if you are created as a Dutch company, well, you have to remain a Dutch company. Let me give you another example. So today, the key problem that we have with taxing multinational companies is that once a company manages to book profits in a low tax place, let's say in Bermuda, where there's no corporate tax, then, that's it. It avoids taxes, and no country is going to try to tax these profits that are not taxed in Bermuda. So what's missing is, a country or a group of countries acting as tax collectors of last resort, basically saying if a company has not paid enough somewhere, we are going to collect the taxes that tax havens choose not to collect. This is something that could be done. For each company, you could compute its tax deficit, meaning the difference between what this company should pay in taxes if it was subject to a minimum tax rate on a country-by-country basis, and what it actually pays in taxes. And then you can compute some of that tax deficit. So, for instance, the Netherlands could say, well, if a company has a tax deficit of 1 billion euros and makes 10% of its sales in the Netherlands, then we, the Netherlands, are going to collect 10% of its global tax deficit, make sure that it has to pay 100 million euros more in taxes. All the information to implement such a tax actually exists, and it would be relatively simple. And the notion here is, we can choose to let companies book profits tax-free in some countries, just like we can choose to tax these profits that currently are untaxed.
Thanks a lot. A very short follow-up from my end. Those deficits of individual companies, do we already know some of them?
Yes, that's a really important question. And the answer is yes, because of some important progress that has happened about 5 years ago, which is the creation of country-by-country reporting, one of the outcomes of the BEPS project of the OECD. So now multinational companies have to produce country-by-country reports. They are not public, mostly, but the tax authorities have those, and they also exchange country-by-country reports amongst themselves. So, for instance, the Dutch tax authorities has access to all the country-by-country reports of Dutch multinationals, and also foreign multinationals that have operations in the Netherlands. Many of them do. And using these country-by-country reports, you can exactly compute the tax deficit. That is, it's very straightforward. You can say, okay, you can compute how much extra tax any company should have to pay if in each country it was subject to a minimum tax of, let's say, 25%. Very straightforward computation to make. And then, yeah, the question is who collects the tax deficit? There are different ways to do that. For Dutch multinationals, the Netherlands could say we are going to collect 100% of the tax deficit of our own multinationals, and for foreign multinationals, do the system that I described, collect a portion of it based on where sales are made, and you observe the location of sales in those country-by-country reports.
Thank you, and I give the floor to my colleague Henk Nijboer.
Thank you very much. Thank you very much for your introduction and the compliments for the article in het Financiële Dagblad with Wouter Leenders this morning. I have a question about the progressive wealth tax. We have a law proposal with the Greens and what are you? European Liberals. And I hope so with the Dutch Liberal Party for the progressive wealth tax. But we debate about the tax levels and also about the amount of money that you ask with 1 million or 10 million or 100 million. What should be the level? Can you elaborate a little bit on that, on those two issues?
Thanks a lot. So, first of all, I think it's not, for economists, to say, what should be the tax rate, who should pay what exactly. I think where economists can be useful is just by kind of showing the range of possibilities, and then if there's a democratic demand for having a certain degree of redistribution, of tax progressivity, explaining how this can be done in practice, like how tax avoidance, tax evasion, for instance, can be combated. Now, I think it's useful to look at the types of proposals that you have in the United States, for instance. So the United States never had a wealth tax. And in 2019, 2020, during Democratic primaries, there were prominent proposals to introduce a progressive wealth tax in the US. For instance, by Senator Bernie Sanders and Senator Elizabeth Warren. In the Sanders proposal, the wealth tax would have started at $50 million in net wealth, meaning, $32 million in net wealth, meaning if you have $32 million, you pay zero, and you only pay to the extent that you have more than that, with tax rates that were increasing gradually to 8% for wealth above $10 billion. So a very progressive rate schedule. In the Warren proposal, the tax started at $50 million. So again, if you have 50 million or less, you pay zero, and then you had a progressive rate schedule. So these types of proposals are very different from the types of wealth taxes that have existed in EU countries, like in France, in Germany, in Sweden, in Denmark for a long time, or the type of wealth taxation that also exists in the Netherlands, in the sense that they target really super wealthy individuals. And it's useful to do that. I'm not saying it's necessarily the best, the only way or the best, way to do it, but it's useful because it makes it much harder for people to lobby for exemptions or to introduce loopholes, because everybody understands that above $50 million in net wealth, obviously you have a high ability to pay taxes. You have a high capacity of paying taxes, and so you don't need any exemption or deduction for lack of liquidity or for stuff for private companies or stuff like that. So that's what I would say.
And then I give the floor to my colleague, Laurens Dassen. In English, I hear your, what was it, the European Liberals, but Volt.
Yeah, we are the European Party Volt. I think more social green liberals, I would say. We sit together with the Greens within Europe. But our main goal is to have our own European fraction because we are present in all different European countries. But my question is a bit on the movement of capital that you also mentioned, and if you speak about high net worth individuals and the way they can move their capital, how do we need to deal with this? Because and you also mentioned the US. I understand that you have a citizen-based taxation model there, and that is quite different from the way we act in Europe. And I was wondering what the differences are, and can we learn from there, or are there other hiccups that we need to address?
Yeah, thank you so much. It's such an important question. So currently you have two very different systems. There's the US system and there's what other countries do. So in the US, if you're, as a person, you're born in the US, so you have citizenship, but then you stay only 2 months in the US, you move out of the US, your parents move out of the US, and you never set foot again in the US. Then, despite having spent only 2 months in the US, you have to pay taxes in the US for the rest of your life. That's the citizenship-based taxation model of the US. That's one extreme. What we do in the European Union and what other countries do is the opposite extreme, where you've spent all your life in, let's say, the Netherlands, and you've built a huge fortune in the Netherlands, being a tax resident for 50 years. You've become a billionaire, and now you choose to move to a low-tax country. Then starting January 1st of next year, you have no tax to pay anymore to the Netherlands, zero. That's extreme in the opposite direction, because look, if you've become a billionaire in the Netherlands, it's partly because you've benefited from public infrastructure, from the education system, from workers, who've been trained by teachers in the Netherlands. And so there's just no natural right to move and have absolutely zero tax to pay to the country that has contributed to making you so wealthy in the first place. And so what I think needs to be done is to have a middle ground. Both of these systems are too extreme, but you could have a system where if you've been a resident in a country for a certain number of years, 10 years, 20 years, and 30 years, now you move to another country, then you would have to keep paying taxes to your origin country for a certain number of years. That can depend on the number of years that you've been tax resident in your home country in the first place. So if you've spent 50 years in the Netherlands, you would have to still keep paying taxes in the Netherlands for maybe 10, 15 years, with tax credits given by the Netherlands to offset any tax paid abroad. So if you move to another high-tax country, you have nothing more to pay in the Netherlands. But if you move to a country where you pay very little, then the Netherlands would collect the difference. It's another illustration of this idea that I was mentioning previously, that you need a tax collector of last resort. If you have super wealthy individuals who don't pay taxes where they live, you need to have other countries, the origin countries, that step in and say, well, we're going to collect the taxes that you ought to be paying.
And would it then be more logical to have a certain amount of years that you still pay taxes in the Netherlands, or would you then argue that it's more logical to have a one-off if you leave the Netherlands, for example?
Yeah, it's a question of whether it's better to have a one-off exit tax, on the stock of wealth, or then a recurring annual income tax. And, in principle, you could have both. I think, keeping, the income tax, still keeping to treat people as if they were residents for a certain number of years is the most powerful tool, because it would also undermine all the preferential tax regimes that have emerged throughout Europe in recent years. And there is one in the Netherlands, a very old one, 30% deduction for high-skilled foreigners who come work in the Netherlands. But many other countries have been emulating this and have their own schemes, which might be good from the viewpoint of an individual country to attract people, but from the viewpoint of the EU as a whole, are just zero-sum, and are a bit worse than zero-sum, because they primarily benefit people towards the high end of the income distribution, so they fuel inequality. And with the system that I describe, it would really radically undermine all of these schemes, meaning if someone moves to a country because it has a preferential tax scheme, that the benefit would be offset by higher taxation owed in the origin country. So it's more systematic, it's more powerful, it's the most powerful tool to curb these emerging forms of tax competition, which I think are quite detrimental for the EU and the world as a whole.
Which countries use this at the moment? Or already do it in such a way that there's a balance between the two extremes, like you mentioned in the beginning?
No country does it, but any country could start doing it.
Sorry for breaking in. There's another... so 2 colleagues are leaving again. Thank you. Thanks a lot. Bye. En voor de mensen die kijken, wat gebeurt er nu? We hebben dit gepland tijdens een stemming. En dat doen we niet heel vaak. Maar dat was omdat onze gast, professor Zucman, in Nederland was op dit moment. Dus we hebben aan het begin ook al onze excuses aangeboden. Dat collega's heen en weer moeten. Want er wordt nu hoofdelijk gestemd. En collega Romken de Jonge en ik zijn er nog wel. Want wij hebben met elkaar kunnen paren, zoals dat heet. Zodat wij hier konden blijven. And that was me in Dutch explaining that there's another head vote, so 2 colleagues had to leave again, and that we already talked about this. So thanks again for the understanding. You answered the question about the expat-regeling. I think, so I'm giving myself the floor for a question. In your introduction, you gave a couple of messages on how to look at tax systems, the development, but also what you could do. And one of the proposals that I took out was the collector of last resort. We are now here in the Dutch Parliament, and we are within the European Union, but also in an interaction with other tax systems. And my question is, could you elaborate on that, maybe focused on, for example, a country like the Netherlands taking such a role? And what you should think about when you would think about such a proposal?
Yes, thanks a lot for this question. And every time I have the chance to talk to policymakers, in any country, I try to encourage them to become, the tax collector of last resort. What I mean is that any country, no matter its size, can do that. Sometimes there's a view that it is something that only, for instance, the United States could do because it's so big, or that the European Union as a whole could do, but it's very hard to get unanimity within the European Union. But in fact, it's not the case. Any country, no matter how small, can do 2 things. One is compute the tax deficit of multinational companies in the way that we described. And the data really is there now within the tax authority, so there's no technical or data obstacle to doing that computation. And then saying, well, look, the firms that have a tax deficit, which means by definition firms that pay too little today relative to a norm of justice, which could be a tax rate of 25%, 20%, we can discuss that. Other firms that by definition pay too little compared to that norm should pay a bit more to the Netherlands. And if a company makes only a small fraction of its sales in the Netherlands, then the Netherlands should only collect a small fraction of the tax deficit. If a company makes a big fraction of its sales in the Netherlands, meaning also a big fraction of its profits originate from the Netherlands, then the Netherlands should say, we're going to collect a big fraction of the tax deficit. And if you do that, so in technical terms, if you apportion the tax deficit proportionally to where sales are made, it will also make this policy very robust, meaning there would be no incentive for a company. Sometimes people are worried that if the Netherlands alone did that, then firms would just move out of the Netherlands. They would just say, I close my offices and I stop serving the Dutch market. But it's not a risk, because by definition, if the Dutch market is small for you, you only have to pay a small extra tax, so it's not worth leaving. If the Dutch market is really big for you, you would have to pay a big extra tax. But if the Dutch market is really so big for you, there's also no point in leaving. It's just, your after-tax profits are going to be a bit smaller. And so that's the reason, the fundamental reason why any country, no matter its size, can implement that system. That being said, it's always better to act collectively. And so it would be better if, instead of having just the Netherlands doing it, you would have the Netherlands plus, 1 or 2 or 3 or 5 other EU countries, paving the way. And I think if a number of countries did that, it would create a virtuous circle. So let me try to explain that. If, let's say, the Netherlands tomorrow applied that policy, and if it was successful in the sense that the Netherlands managed to collect a bit more tax on these very powerful economic actors who pay too little today, then I think other countries would be really interested. They would look closely at this experiment and they would say, okay, why not us? Let's do it also. There's money on the table also for us to grab. And so you would see other countries kind of also collecting their share of the tax deficit. Now, as soon as sufficiently many countries do that, it would really change the face of globalization, because it would become pointless for firms to book income in low-tax countries, because they would know that the tax saving there would be offset by higher payments in other countries, in the Netherlands and in other places. So they would stop booking profits or moving activity to low-tax places. And then knowing that, the tax havens themselves would have no incentive anymore to offer low tax rates, so they would increase their tax rate. And you would see, instead of the race to the bottom, you would see a beginning of the race to the top with corporate income taxation. And so it would shut down, international tax competition, which is a very negative form of international competition. Now, I don't want to say that there should be no international competition. There will always be some form of international competition, but there are positive forms of international competition and there are very negative forms of international competition. International tax competition is very negative because it mostly benefits the wealthy, the shareholders of multinational companies, high income and high wealth individuals. And so it fuels inequality. But once taxes are out of the picture, countries would still compete and firms would still, move potentially across countries, but they would base those decisions on where, the workers are most productive, so where you have the best educational system, the best universities, where public infrastructure is highest quality. So you would have this more positive form of international competition that really benefits broad swath of the population. And so that's how this, idea that can seem pretty technical and narrow of collecting the tax deficit, even in just one country like the Netherlands, at the end of the day, could have really dramatic effects on, globalization itself.
And a short follow-up to see if I understand. Say you would want to take such a proposal. So if I understand correctly, I'm rephrasing to see whether I understand is, what you don't want to do is want to wait to full coordination, because then you need everyone. So you can start unilaterally. Ideally, you do that with 2-3 actors. So you have a setting, so you create an interaction that's going to lead to that positive effect, which is going to get to a reshaping of that competition on, for example, other qualitative matters of your economy instead of only your tax rates. And that could happen if 2, 3, 4 countries together set up such a mechanism. Thanks a lot. I give the floor to my colleague Romke de Jong.
Well, Chairwoman, I'd like to follow up on you because it's a theoretical thing, but making this work within the European Union with the regulation we already have. I mean, we have regulations regarding of the transferring of funds or tax regulated on European level. So can you say something about the issues you see for Europe as a whole? And how you think they can be overcome. And if you let me, Chairwoman, I would ask you to raise a second question on the same topic, because we now speak from companies if there are one, but what we see a lot, of course, regarding tax evasion is that companies set up other companies where they make high costs, so they can shift a share of the profit to low-income tax havens. So it's not just one company, it's a series of companies, of course, where they can regulate where the taxes will end up. Can you reflect on that one as well?
Yeah, absolutely. Thanks a lot for this question. About the European Union. So as you know, for everything that's tax-related within the European Union, you need unanimity. And you also need unanimity to get rid of unanimity, and so it's kind of a bit of a dead end. It's a dead end because a number of countries within the EU and globally benefit from the current status quo. They benefit from extreme tax competition, and they just have no interest in this situation changing. And so if you insist on having unanimity or consensus, then it's a recipe for not doing anything. The kind of the beauty, I think, of the mechanism that I described is that you end up eventually in some form of very broad coordination, but not as a starting point, as the end point. And oftentimes that's how international cooperation works. It's, for instance, if you look at what happened with bank secrecy, before 2017, 2018, there was an almost complete bank secrecy. It was very easy for wealthy people to hide assets in offshore banks. But in 2010, there was unilateral action by the United States with the Foreign Account Tax Compliance Act, where the US threatened Swiss banks with economic sanctions. And under that threat, they agreed to cooperate with the US tax authority. And then other countries kind of said, well, look, if you're cooperating with the US, why don't you cooperate with us? And that's how where there's some, initially unilateral action by one country ended up in a new form of international cooperation, which is the International Automatic Exchange of Bank Information, the Common Reporting Standard, that entered into force in 2017, 2018. So since 2017, banks in essentially all the world's offshore financial centers have to automatically send data to the Dutch tax authority, to the French tax authority, and so on. That's, I think, the lesson from there is that we all care deeply about, having the maximally broad, most inclusive, largest international agreements possible. But the way to get there is not to make that a constraint as a starting point, but it's, the end point, not the starting point.
No, it's sufficient for now. Thanks.
I give the floor to our colleague. Roosas, heb jij nog een vraag of niet? Okay. Then I give the floor to myself, and then I'm going to look one more time whether there are follow-up questions before we close off this conversation with the Permanente Commissie Financiën. I have a question on a very different abstraction level. One of the observations, and this is a personal one, but also based on literature, is that we have very dominant political debates on tax levels when they're on income taxes, because a very big portion of society interacts with that because they provide labor and they pay income taxes. Whilst whether it's wealth taxes or others, you see in the political debate, it's growing and it's changing, but there seems to be less political tension, less lack of knowledge because the group is smaller. In your introduction talk and also in the research, you see democratically you can make different policy decisions. So it's not a law of nature. You can make different choices and they have to be democratic. So my question is to you as a scientist, but also one that is specialized in public policy. What can politicians learn on the evidence that exists within different tax systems on how to structure, how to inform and have these conversations in within the democratic discourse? I don't know if you understand the question, but I was interested to hear whether you had something to say on this.
Yeah, absolutely. I think, taxes are probably one of the most important democratic, question, one of the most important questions that we face as citizens, as voters, for the very simple reason that, in our high-income economies, the government, taxes 30, 40, 50% of all income each year, with a ratio of tax to national income of, 40, 50% in most EU countries, and redistributes all of that each year. And so it's just such an important, institution that it's really important to have the broadest debate and conversation possible about how to organize this big machinery. And what's really important is, to have research, and there's been great research that was done in the Netherlands about who exactly pays what, how progressive exactly the tax system is, to make sure that researchers have access to the best possible administrative data to estimate these very important parameters that are so critical for the quality of the public debate and then for policy making. So what I want to say is just I want to, encourage you to be as supportive as possible of the great research that's done in the Netherlands with tax data, with administrative data in general, because I think it's really a major public good then for the for policy making.
Thanks a lot. I look around one more time and then I go to the final question that I ask as a chairwoman in this today before I end our meeting. And that is there something, we're here as MPs, you started off with some general lessons for us all. Is there something finally that you want to say to us, a question we didn't ask, or some final message that you would want to give us?
I just want to thank you a lot for the opportunity to be here and to exchange views with you. And again, it was a great honor and a great pleasure. I also want to say that, you know, I'm at your disposal if you want to follow up, if you have other questions on specific issues. So please feel free to reach out to me. And, you know, thanks again for having me.
And then I have one more duty to say thanks a lot, Professor Zucman, for coming. It was a very informative meeting. En voor iedereen die heeft gekeken, dit doet de Kamer dus ook wel eens. Dit was een gesprek met een wetenschapper, met de vaste Kamercommissie Financiën. Dank voor het kijken en een hele fijne dag.